Greetings, my YouTube family. Thank you so much for visiting my channel. And today I'm going to be reviewing Apple Inc., the business. And I'm going to, first of all, disclaimer that the content that I'm going to share with you is meant for general informational purposes. It's basically for educational purposes. As such, it should not be taken as investment advice. Please make sure you read and understand this disclaimer fully before you proceed. But for the day, I'm going to, like I typically do, talk about Apple as a business, what they do, the merits, go through their financials, and then conclude by sharing my views whether it is a good business to invest in or not. But for those who don't know me, my name is Isaac Jonas. I am a trained economist, but the good thing about what I'm doing now is I'm applying what I learned in theory. So I like to trade, particularly options now, but I have been investing as a retail investor in the US and Canadian stock exchanges since 2020. And I like to create content and just to share my personal experience because it was really challenging for me to get the kind of knowledge that I have. I'm still learning every day, but I just couldn't find some information, for example, about how to trade, how to invest, how to value businesses. So I've invested quite a significant amount of money for online courses, reading books. So I like to then share this knowledge just for educational purposes in case maybe someone might learn something and maybe find it interesting to apply in real life. And now when I think of Apple, the first thing that comes to my mind is I have an iPhone here, right, as an example. You can see that I have an Apple Watch. So these are some of the products that Apple business actually they design and manufacture. So when I own a business, a share, you know, in a business, what it means is I'm owning a piece of that business. So the first thing that I ask myself is what do they do? What service do they provide? Right? So in the case for Apple, they design a variety of wide consumable devices like I've just showed you, Apple phone, iPhone, iPods, and you can read through. But the most interesting thing is that Apple, they don't only design these products, but they also develop software and semiconductors. So this firm is well diversified and it's globally um, spread across in terms of manufacturing uh, factories like in China. So even the products they are sold all over Africa, Europe, and all other parts of the world. So that means there's geographic diversification of the revenue. So it's well known and it's a market leader, right? And they generate 40% of their revenue in the Americas, with the remainder that is 60% generated internationally, which is something I find interesting. And when I invest in a business, I'm buying a piece of that business, part ownership. So I like to know, number one, my return on capital on or equity. So if I invest my money, you can see here someone who invests in Apple, on average, it has been returning about 156% compounded. So mine who is I like to invest in a business that gives me at least 15%. So if it doesn't meet that criteria, unless it's just something that I'm putting a small amount, 1 or 2% for speculative. For example, if I think of maybe investing or speculating in stocks like Bitcoin as a security, or also maybe Reddit that was um, listed at the New York Stock Exchange. Actually, I was in New York, and the day that I passed through the New York Stock Exchange, that's when it was listed last Wednesday. Today, I'm recording this video on the 27th of March. So I can possibly just consider, but I like to invest in quality businesses that have a good return on equity, that have a good return on invested capital. You can see that Apple here it's like 62% over the past couple of years. You can see that they also offer dividend, even do share buybacks, because what happens is typically if the amount of shares is constant and they buy back those shares, it means potentially the value of those shares might go up in terms of, the appreciation, right? The stock price might go up, so they do the share buybacks. But right now, when I recorded, the price was at $172.23 as it was trading, right? So you can see that it has pulled back, and I'll talk a little bit more about that because the Department of Justice, let me just talk about it now. They launched an antitrust law, basically a lawsuit, including other countries in other states in the US and other individuals who think that Apple, the way they design the ecosystem, is hard for customers to switch away from them. So it's a classic case. Amazon, even I think Microsoft, Meta, they all went through that. So for me, I see those as potentially good opportunities to consider buying some of these shares if you understand the business. But for me, I'm not buying Apple right now. But in the past, they've consistently beaten their earnings. They have their second quarter earnings coming up on 3 May at 12 p.m. Eastern Standard Time, and you can see that there will be an earnings call on May 3. These are events that are important for me because when I invest in a business, I want to be part of this, understand what the CEO or the top leadership is saying, because I want to understand where my money is going, how it's going, how they plan to give me a good return on investment, essentially. And I like to see businesses that have revenue that is increasing. You can see for the past 10 years, in September 2014, the um, revenue for Apple was 182 billion. And you can see that it has been increasing consistently. You can see this trend, it has been going up. The latest they had here was 385 billion 706 million. So you can see that it has been growing consistently. I then like to see the long-term debt. I like to see it fall, but you can see here Apple, they have about right now, most recently, 95 billion. But before I condemn them or be too excited, I look at every year correspondingly, right? Now on the free cash flows, they have 100 and let's say 101 billion, so they can easily pay off that money, that long-term debt. So it's good, they manage their finances very well. And I like to look at inside trades. When I see April 6 April 2023, that's when there were some sales, but these executive insiders, sometimes they exercise their share. um, let's say they have shares, they can sell. But I like to buy when insiders are buying. I didn't say some of these insiders are buying. And I also like to look at the industry as a whole or the sector. I see the PS for Apple, the ones that are competitive in terms of the moat. If I look down here, I can see Sony, it is 66. That score that I use the Rule 1 2 box. But in terms of their management score, they don't manage their finances that well. It's 45 out of 100. So Apple is actually the best here. Even though I see Visuix Corp, this is another interesting stock, but they've been losing money. You can see here the return on equity. If you look here, it's minus 35%. I don't invest in companies that lose money. Now, I can say they manage their finances very well. Apple is a fantastic business. The outlook in the sector is very good. They have a good track record of beating earnings consistently, and they have a moat, which is good. That means they can alter their prices, increase or decrease comfortably without necessarily reducing their profitability. And now, is this the right time to buy? For me, I think if Apple shares they retreat maybe to 160 or 150 level, I can potentially buy. But I also own some Berkshire Hathaway Class B shares, and the last filing for the company that is run by Warren Buffett and other leaders, yeah, who work with him, like IJIT, uh, they had about 50.04%, right, in Apple. So I have exposure to Apple actually. very good exposure in that. And also I own some exchange traded funds like SPY that track the S&P 500, and they have about, I think, maybe 8% or something like that. So I do have some exposure, but Apple is a good business. But at the same time, I like the fact that I have some exposure that is diversified. But if it retreats to a certain level, like I said, below 150, 160 zone, and that's according to my valuation, I would start to potentially buy maybe up to 5% of my portfolio, because it's a fantastic business. They have wonderful business ethics from what I see. And also I like to also even go further into their earnings, and also their filings with the Security Exchange Commission to see what they say, the risks, and those things are very important, because if I invest in a business, I want to understand what they are doing and what are the risks, and also the potential and exciting things that they are doing. So that's it for today. So this is a series of me just sharing what I think about some businesses that I consider investing. Hopefully you learn something. If you have some thoughts, please kindly share them on the comments. And also, if you haven't subscribed, please, thank you so much in advance, kindly subscribe so that this content can have a wider reach. Thank you so much, and may the markets be with you, and all the best in your investment journey.